Hello and welcome to this Red Cloud webinar. Thank you very much for being with us. I'm your host, Mark Bunting, the host of RCTV. Our guest today is Daniel Major. He is the CEO of GoviEx Uranium. Great to see you again, Daniel.
Yeah, thank you. And we got through this time.
Yeah, so far so good. Apologies to anybody who was on the previous attempt at this webinar. We clearly had some technical issues. We think we have them ironed out. Now, we'll get back to Daniel in just a moment. We want to tell you that we encourage your questions, which we'll get to at the end of Daniel's presentation. So just put them in the chat function on your screen. I've got some questions of my own that I'll sprinkle in toward the end as well. Now, again, before we get to Daniel, let's give you a little refresher, a backgrounder on GoviEx Uranium, a mineral resource company focused on the exploration and development of uranium properties in Africa. It trades on the TSX Venture under the ticker symbol GXU and over the counter on the QX exchange GVXXF in the United States. Now, GoviEx has a sizable resource inventory with more than 130 million pounds of uranium in measured and indicated categories and more than 30 million pounds of uranium in the inferred category associated with its material projects. The company's principal objective is to become a significant uranium producer through the continued exploration and development of its material projects, namely the mine-permitted Madawaila project in Niger and its mine-permitted Matanga project in Zambia. Now, with that, Daniel, I'll hand it over to you, and you can take it away.
Thank you very much. And I thought, well, firstly, let's deal with the disclaimers and cautionary statements, just in case I make some forward-looking comments. But I just thought on this one, as we got the time, I would just quickly go through really why we're all here. And really just a refresher for anybody who's doesn't really new to the area. This is all about clean energy. The world is definitely facing an urgent need for clean green energy. We continue seeing questions on the reliance of fossil fuels. It continues to increase and not decline out there. And certainly its impact on the environment, whether it's climate change or just environmental degradation, when you think about the great big lignite mines in Germany. It has been, energy in general has become very complex, though, and particularly after Russia's invasion of the Ukraine. And we are seeing a global push towards environmental friendly energy sources and sustainable ones. And that's where nuclear finds itself. And we're finding that increasingly within the various poolings that are going on. Within this, uranium is very much a clear winner. Increasing commitment to greenhouse gas emissions are driving that. Governments have realized, as I go through in a minute, that uranium has all the attributes, nuclear has all the attributes that are required to achieve these goals. China is clearly buying into this aggressively. China's going from a consumption rate at about 11,000 tons of uranium a year now to about 43,000 tons of uranium by 2040. Japan's restarting its reactors. We're seeing a lot of other growth within the developing markets and in more so now African countries lining up to be interested, particularly with the developments of the SMR. But supply remains uncertain. We've had a massive amount of under exploration. We're coming off a new low on exploration spend in the market. We're seeing an issue where there is a massive disconnect by those that produce the uranium versus those that consume it. And as we go forward, that disconnect continues to expand. And so there'll be competition for the available resources. Secondary supplies are declining. And as you see from this slide here, that the WNA have pulled together, they're requiring the material that's coming from prospective supply with no indication really what that prospective supply is going to be. And what is clear for the utilities, a need for new projects, and that's where the African projects certainly bring that diversification. And why go to nuclear? I mean, it is one of the cleanest forms of energy, actually producing less greenhouse gases than any other. It's very safe. It has a very high operating capacity, and its fuel use is incredibly small in relation to the other peer groups that it's got. It also consumes a very small amount of land, as we have governments pushing to expand on renewables. If you wanted to put in solar for the equivalent a nuclear power station, which is about 3 kilometers squared, the equivalent in solar would require 150 kilometers, and a wind farm would require over 700 square kilometers. So massive amounts of land or water. There's also a lot of push within governments for critical minerals, whether they're being used in the solar and wind industries, EV cars, etc. But from an energy point of view, nuclear again stands out. It requires very limited amounts of steel, concrete, and aluminium. I mean, why would you go into somebody like wind, where you end up using a lot of concrete, producing a lot of CO2? Nuclear is much smaller, and also consumes very small amounts of critical minerals, which, as we're seeing with the rare earths, the challenges around the world, the competition from China, again, providing that support to an energy source that's not got a commitment for a single supplier. It's also one of the lowest cost inputs of power. If you wanted on a direct comparison for a 24-hour basis, assuming batteries applied to wind and solar, on nuclear, it'd be looking at about $122 per megawatt hour on average. Wind coming in at 291 and solar at 413 megawatts. So again, a good reason why a lot of places are looking at nuclear as part of the energy mix going forward, and it's available all of the time. And we're seeing other innovations going forward, marine applications, hydrogen production, centralized heating, particularly in places like Finland and Russia. But on top of that, a large amount of work going into the SMRs. And for the first time, we saw the WNA include SMRs within their forecasting, both from a supply and demand point of view. So seeing that become very much part of the play from 2030, really looking at SMRs entering the market commercially. But as commented, supply is the issue here for us in our part of the industry. We've seen this decline of older projects closing up. We've seen the concern of risk now as new projects come on but aren't meeting their targets, whether that is MacArthur River ramping up and not achieving where it's going, whether that's Peninsula having to redesign their project to contract change, etc. And in the case of ourselves in Niger, Somalia mine being closed down because it can't get to supplies for political risk reasons. So supply risk remains very much part of it, and diversification is key. And that's partly where we come with our portfolio. So we've got the two main projects. We've got the Madaouela project in Niger, mine permitted, and the Matanga project in Zambia, also mine permitted. And we have our exploration play in Flair. We've got a lot of exploration on all of our properties, and we continue to focus to becoming a producer. Our ability to get permits sorted out very quickly in Africa is one of those key aspects of that. So Madaouela, right next to the operating mine of Somalia and the recently closed mine of Cominac in northern Niger. Good road access, good power supply, water, etc. All of our permits are sorted out. We are having to update our environmental permit because we changed the project to make it a better project, and that process is underway. Got good government support continued. We've had meetings with the new government. They are supportive, as you would expect. And I'll come on to where the political situation in Niger is just now. And we remain on track, but obviously there are question marks increasingly of whether that date is going to be, or we're going to have to push that date out based on what the political situation is in Niger. And if I touch on that now, we had got to the point of receiving our last LOIs required for our debt financing to at least lay out who our parties were to go to the next stage. Unfortunately, we received it on July the 26th, which was the day of the coup in Niger. All of the parties we were dealing with regarding potential lenders have all indicated that they obviously can't continue to move forward as it is, but they will put it on pause. And then once we get a resolution, they will then, based on that, move forward into the next stage. And I think that's across the board with all lenders in these kind of jurisdictional issues. We've had a lot of support because they were export credit agencies, development finance institutions. These are government related. This is a political decision on investing. And we see that very much part of the guidance is, yes, if we can get a sensible resolution in Niger, which everybody wants, and a stable government, then they're willing to support that going forward and continue to engage with us. At the moment, we continue to deal with the ministries, both the Ministry of Mines, Ministry of the Environment, but the country at the moment is completely locked up. There are no real ways of getting in or out by major transport route, either Algeria or through Benin, and as a result, that's why Somalia closed their mine down, because they couldn't access the operation. So until that is all resolved, we are on pause, but deal with the ministries on the things that we can deal with them on until the next step. In the case of Matanga, we really benefit from having this diversity, and we were able to take a project that we were already advancing, start to accelerate it instead. It is a fully mine permitted project. It is a combination of two projects that had previously gone to pre-feasibility study. So a lot of technical work there. Our target at the moment is to get the feasibility study completed for this one at the summer of next year. It is really well positioned down near to Lake Kariba. We have the Kariba Dam within 30 Ks of us, which can potentially provide power to this project. We have good road access and road access through to Namibia, which would be our export point as well. We're currently working on the ESIA here as well, and updating that, mainly because the Dibwe East deposit was not in the previous environmental permitting, and we're working on updating our relocation action plans with the community to move them. We did do a PEA back in 2017. The numbers are shown there. Interestingly, I was asked the other day about from a fund manager about inflation. We were looking at some optimization on this project. I asked our consultants to do a quick and dirty recalc of what a plant size would be and costing, and they came up with a very similar number to what we had back in 2017. Obviously, we've got to still turn that into a feasibility study number, but getting some comfort that we're not seeing rampant inflation as a result of the design that we had on this project. So currently on a $65, we'd be looking at about $189 million MPV for this project based on the 2017. Technically from a 43-101 that's no longer valid because we have the resource update. At $70, that number's $240 million. So GoviEx is trading at a massive discount just to the valuation of Matanga. We've updated the mineral resource this year. That increased by 18%, and we saw an increase in grade across all classifications. We've gone back during the rest of this year and carried on infill drilling that inferred to get as much as we can into the feasibility study. That work is now finished, as I said, targeting the summer for the completion next year. This project really benefits from the low strip ratio, but more importantly, that very low acid consumption. If you look at Nigerian projects, they can generally consume well over 100 kilograms a ton. Madawaila is about half that because of our plant design. Here we're looking at 10 kg a ton in a country that produces sulfuric acid straight from the copper belt. So we can buy sulfuric acid in country for this operation going forward. Commitments to ESG. This is important, is no longer a fad, it's a requirement in many areas. Particularly when we're talking to European off-takers, they demand a fairly extensive review of ESG, even to sign up for some of the RFPs that we've been putting in. New regulations in Europe particularly are going to require a lot of companies to drive down into their Scope 3 requirements as well. So we'll have to report our ESG requirements into the utilities in Europe. So we're getting ahead of that, making sure that we have all our systems up and running. So when we get a mine up and running, we can fulfill those ESG reporting requirements and also be allowed to get on their shopping list as well from a selling point of view. We have recently updated our sustainability report. We've actually put the 2023 one out last week. And then back to the valuation, we continue to trade at this discount. We appreciate, obviously, the coup has had a major impact on risk perception here, but we're now trading at less than half the valuation of Matanga alone, and Madawaela effectively he's been got for free within the company's valuation at the moment. We finished the half year with about $8 million. That money will get us into next year. As always, I keep things as lean and mean as I can across all aspects of the way that we run the company. And in fact, interestingly, UXC in their last quarterly report did an analysis of companies that have raised money of the developers, and GoviEx has actually raised the least amount of money of our peer group and actually done that for 3 projects, whereas most of our peers have only done it for a single project. And so just on the investment case again, obviously the uranium market looking very robust out there. We continue to see it going from strength to strength. We've got the board, we have the experience. Africa is a great place to do business most of the time, but we're permitted, and we'd expect, in every case, mining is the forefront of the economic growth. Governments want those mines to go forward, and will commit to ensuring that is the case. So thank you very much for listening, and I appreciate you, and then we look forward to the questions. Thank you.
Okay, great stuff. Great stuff, Daniel. We appreciate it. So let's just stick in Niger if we could.
Yep.
You say that your operations have not been affected, that you're in contact with the new government, they're supportive, but that your lenders have pulled back for the time being, potential lenders, so they're on pause for obvious reasons. So what does a resolution look like, and do you have any sense of when that and how that might come?
The problem you've got now, to be candid, is and what is different about this coup, so if you looked at, say, what you saw in Gabon or Mali or Burkina Faso, has been the impact of ECOWAS. They realized, ECOWAS had realized very strongly that Niger could not be allowed to go down and stick to the same path that you'd seen in Mali or seen in Burkina Faso. I think that's particularly poignant because the president of ECOWAS at the moment is the president of Nigeria. And of course, Niger had helped Nigeria deal with Boko Haram and the issues that it had had on its eastern border. So you couldn't allow it, because you'd start seeing a toppling within the whole of West Africa if that was the case. So what that has meant is that there is no access in or out of the country through Benin, through Algeria, through Chad, the normal import routes. You can go through Burkina Faso if you have a death wish. That is one option to go in. Air flight is very limited. You can go in through Burkina Faso because you can get out again without having to refuel because there is no fuel. Bank system is pretty well struggling. Food is starting to run out as well. Things like rice got very expensive in the country. So the problem is you've got a junta government at the moment that's trying to deal with this. It's had to cut its budget by 40%, and it's in lockdown. So I think the resolution ultimately will have to be a return to some kind of change of government that follows on where we are now. I don't see how this government can keep going on when the populace is under such pressure, and it's finding that pathway. So I'm optimistic. I think by the end of the year that will have occurred. And if that is the case, given where we were before, there was a lot of support from North America, whether it was the US or Canada, a lot of support and a lot of money going to Niger from Europe. We were getting good support from the export credit agencies in Europe as well, that there'll be money thrown at Niger if it's acceptable what comes out of the other end by Western governments. And that'll be very good for ourselves on the lending side.
Daniel, just one more question on Niger, and we'll move on to other topics. But Niger, as you know, has been very uranium mining friendly for more than 50 years now. But within Africa, there's always that investor perception, geopolitical risk. What was your assessment of potential geopolitical risk when you got involved with GoviEx? And what's your impression now that you have seen this coup? Is this something you always thought was highly likely?
Niger, I think, has had 5 coups since it went independent. So, it's not new. I've had a coup in Mali. as well since I've been, and coups are a regular thing. I mean, they're almost democratic changes of government in process, and it's almost an expectation. But the one thing you've always seen, with this exception at the moment, is that the mining industry doesn't stop. You look at what's going on in Mali. I mean, Barrick and its gold mining operations just keep going. Governments need taxes, they need revenue, they need jobs, they need all of these things to keep going. And coup governments, junta governments, tend not to be nationalistic or socialistic. They're there for material reasons, and they want business to keep going. I wasn't worried about having a coup. We dealt with it in GoviEx in 2010 before I got there. It was fairly pragmatic, just got on with it. So this has been a bit more difficult and a bit more challenging, but we're only at a short point in time in it. But certainly all the feedback still, while you've got the outside constraints from the government, is we want the mines to get going again. We want production. I mean, at the moment, the constraints are coming from the outside as much as anywhere else.
All right. So assuming we will see some sort of a positive resolution in Niger in the coming months, let's set that aside for the time being. You have said that you think GoviEx really is in the sweet spot, and it's perfect timing in terms of offtake agreements and filling a supply void starting around 2025. And you've said that a number of utilities, they have their books are kind of empty 25 to 27. So can you speak to that, about how nicely you're positioned in terms of the requirements of utilities?
Yeah, and you can see that now with the RFPs coming out. I mean, if I was here 18 months ago, RFPs were just like, the occasional little ship on the horizon that you saw, and one went past, oh, wow, RFP this month. Exciting. That's no longer the case. We are seeing very regular RFPs going out into the market from the off-takers. A lot of them, they're getting longer and longer as well. Interestingly, there's one, you can go and publicly have a look at it from the Koreans but we can't bid on that one. They only buy from producers. But interestingly on that one is they've set a range on it as well. They're happy to have a pricing range going forward, but the floor is 55, the ceiling is 90. So it just gives you a sense of where some of these utilities are seeing this market going. There's a lot of flexibility. Europe, interestingly, 25% of Europe's material last year came from Niger. It needs that continue to come through. It also got from Canada. It also got from Kazakhstan and Russia. So it's got a fairly interesting political mix in there, and it needs to keep that balance. So again, that commitment, we'll see a lot of support coming out of those. And the other thing to remember as well is that, as I said in the presentation, China consumes about 11,000 tons of uranium at the moment. By 2040, that gets to over 40,000 tons. Due to safeguarding issues, it makes it very difficult from Canada and Australia to purchase uranium. So Africa is the one place that they can always go to find uranium as well and purchase it. So that's another aspect of where we are with that market.
And then with Matanga in Zambia, you said you're aiming for a feasibility study in the summer of 24. Can you maybe elaborate a bit, flesh that out in terms of what work you'll be doing leading up to that?
Yeah, so we did all the drilling for the resource update this year. That's done. All of the work for the other things like geotech, water drilling. I mean, one nice thing is we've got so much water, it's fantastic. We've been doing work on starting the logistics work in infrastructure. Met test work is ongoing just to verify what was done before, and we've got a program of that going through the Christmas months into early next year. And then the design engineers will just kick in and start taking all of that and turning it into a design. It's a very simple project. I mean, it's just a open pit heap leaching operation. I describe it as an upside down ISR because it's that basic. You just pile everything up on a heap and throw a solution over it. And we've designed it a bit like an ISR mine with its satellites feeding into a central processing plant. But we've had to think ahead a bit on that one as well, because we reported in some of our articles on our adult education program there. So, we have a lot of commitments towards local procurement, local employment. And as part of our ESIA there, we discovered that about 70% of our adults on the site that we would end up moving had no education in English. at all, because there was no schooling system for many of them at the time, and we need them to get to grade 4 so we can train them up to do other jobs. And so, we've started a fairly substantial adult education program with the Department of Education. So we've currently got 500 students doing that for the day, and they're making a commitment. They've got to go to school 4 days a week. So a strong commitment from us, but a strong commitment from them. So you've got to think ahead on these projects as well.
That's interesting. Now, with the Falea, you had a deal in place essentially to sell it. That fell through because the potential buyer couldn't meet the requirements of the deal. So what's the plan there? Are you going to try again, or what are you going to do there with Falea?
Yeah, we now have to. We're under reapplication for that license. It had come to its end, so we're in that process at the moment. We're also waiting because the government's completely changed the mining code there. And when it changed the mining code, it had to change the regulations. So we're waiting for the change in regulations to come through from the government. Again, expect that to come through fairly quickly because they can't do a single application or renewal or anything in that area. And then once we get it back, we'll then revisit it. Our target is very much Madawaela and Matanga, and getting on with those two. Falea will revisit and see where we are at that time. Maybe there's a different type of deal to be done out there.
As far as the uranium market itself, you said during your presentation, you're just going from strength to strength, or at least the sector is. We have seen a big run up in uranium stocks. That we saw some profit taking in the past few weeks, but as I look today at my stock watch list, I see a number of them up, including Cameco and others, and some of the ETFs as well. So, what's your overall assessment of the investor sentiment in the sector?
Look, we've now again, if you talked to us 6 months ago, 9 months ago, everybody that we were doing meetings with were uranium funds of some variety or another. That is no longer the case. Today, I had a call with a very large fund out of Norway. Massive. I mean, they predominantly do oil and gas and other things, but they've suddenly realized that uranium is an area that they want to go and have a look at because they see a completely dysfunctional market that needs to have a price increase to go through. So you're seeing a lot more generalists coming into this market than you were before. And I think that's telling you something. But I think, again, if you just go back to that supply and demand and you look at that chart, you're under the WNA, and you've got to remember they're the most conservative. They will always fill the gap somehow. But from 2028 onwards, you're relying on projects that don't really exist yet. But even within that pile, you're relying on projects that are there, but there's no guarantee that you're actually going to get there. And I think at the moment, I was pulling a slide deck together for something else. If you take 100% of all production today comes from existing mines. By 2040, only 22% of all uranium production will come from mines that are currently mining today. And 40% will come from projects that we don't know about yet. Yeah, and that's only 17 years away. You think that's no time. I mean, it takes 10 years to permit a mine, and we're in this situation from 2028 onwards. You've got to just falling off. We're trying to fill it up with new projects that we do know about, but they've all got to come in on time to meet those requirements. And if they don't, we have a bigger problem. So we're at that point now where this is all about supply control, getting material in there and meeting the needs for the uranium market, the nuclear market going forward. Otherwise, the prices just keep going up.
And this call you had with a fund in Norway, you probably can't say, but it wasn't the Sovereign Wealth Fund, was it?
No, it was not. Another one.
Well, you did say massive, so I'm just checking. Are you fairly content with the market awareness for GoviEx in terms of ETFs and funds and high net worth individuals and whoever else you want to get involved? Or, I mean, you'll always want more investors, but are you fairly happy with where you're at right now?
No, I think we're never satisfied with where we're going. Obviously, our share price is telling us we're not satisfied. We think we should be worth a lot more than we currently are, given where we are just valuing on just the Matanga project. And if you compare that relative to our peers, so no, we need to do more, and that's why we're doing this, and we're doing many other aspects. And you're always trying different things in this business, to see what fits properly. But no, we will continue to work hard to get the name of GoviEx out there.
Right. I mean, you do say you're trading at a massive discount, and investors are getting Metahuela for free, essentially, right now. Just last question for you here. You've said before that in the last big uranium cycle, that the real value was in acquisitions. So take us forward a few years. Is that the ultimate end game? If somebody comes knocking on the door and you execute and you build out GoviEx Uranium as you want to, then that's the ultimate end game?
I wouldn't say that. I mean, you've got to always look at what adds value across the whole curve. If somebody walks up and hands you a check that you just think, I can't not take that check, then we'll come to the shareholders and offer it to them. If we feel that we end up going down that path and we build it and we get the re-rate that we deserve as a result of doing that, then that will be the path. I mean, I always as well continue to look at M&A options out there. I certainly think one of the problems we have as an industry, which is why we did our consolidation stuff back in 2016, is that the majority of my peers only have a single project and really don't have a lot of upside from that point onwards. And a lot of projects out there are actually relatively short life. They're less than 10 years. Even something like NextGen is actually less than 10 years in life at the moment on its current design. So, you need other options that are out there. So I think M&A is something we're also going to start seeing. We're starting to see it already, but that momentum will continue in our industry.
And lastly, Daniel, is there anything we haven't touched on you'd like to say as we wrap this up?
No, I think you pretty well hit me on most of the questions you needed answers for. I mean, look, the market looks great. I mean, we're confident and I remain optimistic on where we are in this year. I think we're going to get a structure that people can then work with and be supportive. It has to, because otherwise ECOWAS won't change their position, and I can't see how it gets any better without that. And then, our projects are very robust. We did a lot of work already on the debt financing and the offtake. It's a shame we've had to pause it for a period of time, but, we'll just regain that momentum. And at the same time, it's given us an opportunity really to expose Matanga to people. We'd already been talking about Matanga, but a lot of the messaging we get, everyone fixates on Metahuela. It's like, well, guys, there's this project here. It's really low capital. It's got in a great jurisdiction. Its rate of return is actually greater than the Metahuela project. A robust project for everything that goes on, and in a really good jurisdiction. So I think that's been actually quite an interesting part of what's been going on recently, is our ability to elevate that second project.
Well, thanks so much for your time today, Daniel, and for the update. We'll be following. We'll see you soon.
Thank you very much. Appreciate it.
Daniel Major, the CEO of GoviEx Uranium. Thank you very much for joining us today. You can watch the replay on the Red Cloud website, redcloudfs.com. And or on the Red Cloud YouTube channel as well. Stay tuned and keep your eyes open for upcoming webinars and other events. We have the Red Cloud Fall Mining Showcase coming on November 7th and 8th in Toronto. So look forward to that. You can register at the website. Thanks again, and we'll see you next time. Take care.